UiPath had a strong earnings report last night. The stock is up over 11% at $18.04 today. This video is going to give you the details, not only on UiPath's recent earnings report, also give you a little bit more information about the company, a little bit deeper dive. We'll also look at valuation and a chart, and I'll give you my overall thoughts about UiPath's future. So right now, it's about a $10 billion market cap. Now, year to date, this stock is up about 47%. In the past year, it's up about 30%. Now, if you zoom all the way out since this went public, this is one of those IPOs that got crushed, came public here in April of 2021, started trading around $75 a share. If you bought it at 75 or even worse at the top, close to $80 a share, you're down big. You're down probably 75, 80%. But we care mostly about where the stock is going, so let's break it down. Earlier in the year, I did a top 10 AI stocks to buy for the next decade, well before the AI hype. This was in January, and UiPath was one of the stocks on that list. Now, most people think of RPA, robotic process automation, but UiPath has become much more than that. They call it their business automation platform, and that includes discover, automate, and operate. We'll talk more about that later. So UiPath non-GAAP EPS of 9 cents, that beat by 6 cents, a strong beat there. Revenue, $287.3 million, that beat by $5.23 million. It was up 18.6% year over year. Now the ARR, the annual recurring revenue, $1.308 billion, that's an increase of 25% year over year. And that dollar-based net retention rate of 121%, which is strong. UiPath shares surged more than 10% on Thursday after the robotic process automation company reported better than expected earnings in the top and bottom lines. Analyst Terry Tillman has a buy rating and a $20 price target on Path. He said we're seeing early benefits in a change in its go-to-market strategy. They made some changes last year. With more to come, he also noted, and this is something I noticed in the earnings call, I just got done listening to it, increase in free cash flow guidance to $250 million, and that is a big positive. Quote, we believe Path is an automation leader and should benefit from the groundswell in generative AI. So we're going to go through some highlights right on the investor relations page. Now, this is a quote. Right now, UiPath has 2 CEOs. So Daniel Dines, who's a co-founder and he's been CEO for nearly 2 decades, and then Rob, who's going to take the helm here in 2024. So January 31st, 2024, Daniel Dines is going to step down. Rob is going to take that helm. In a quote here from Dines, Rob will become sole CEO and I'll assume the newly created role of Chief Innovation Officer. As an engineer at heart, this has always been where my true passion lies. And this makes sense. The company is trying to get to that next level, and I actually see this as a huge positive for the company. He says in a quote, I plan to drive the UiPath innovation agenda to transform enterprise automation by harnessing the next generation of AI technologies, talking about generative AI, into practical solutions for our customers. So back to this quote from Rob, the other CEO. We delivered second quarter fiscal 2024 ARR, that's annual recurring revenue growth of 25%, while executing on our strategic initiatives and driving operational excellence across the company. Looking to the second half of the year, momentum is building across the business as customers recognize the need for efficiency in the current operating environment and the long-term structural advantages of automation. In a quote from Dines, harnessing the potential of AI is the top of almost every executive's agenda. We'll talk about this later in the video, but you think of generative AI, it's really stimulated the growth for UiPath. It's made it simpler to have those conversations. And if you understand how UiPath's tools work, it really enhances generative AI. It works in a collaborative fashion, and it really drives ROI, return on investment. So you can see some of the highlights here. I won't read all of them because we're going to go through a couple slides. One thing to note here is a stock repurchase program was announced, so $500 million of Class A shares. So this is a big slide, and it really gives you a snapshot. It gives you a visual of what UiPath's all about and how it really fits in. AI-powered automation. So you look at that infrastructure at the bottom, you've got generative AI. So from Microsoft, OpenAI, Amazon Web Services, Google Cloud Platform, and so on. You have the specialized AI, which includes processes, tasks, screens, and documents. And at the top here, you can see all the AI-powered solutions that UiPath has. Some notes from the earnings call. So pipeline growth heading into the end of the year, very strong. They're seeing strength in banking, financial services, healthcare, and technology. So Mitsubishi, as an example, expanding the UiPath platform and growing automation across the company. Claims forms automation interest is growing in healthcare. So you think of healthcare, there's lots of different claims forms, insurance claims. This is something that UiPath can help with automation. Saudi National Bank expanded to a full platform in this last quarter. And also a Fortune 500 oil customer expanded the platform. So that's where you're seeing that strong net dollar retention. UiPath is continuing continuously adding more modules. So not only they're keeping their customers, their current customers are also expanding their footprint and buying and adding more modules. Plus, of course, UiPath is adding more customers every quarter. Looking at some of the industry analyst recognition here. So the leaders are up here in this top right of the quadrant, and you can see UiPath in all three. So Everest Group for process mining, Everest Group for intelligent document processing, or IDP. Now, this is the first time that UiPath has been a leader in IDP, and that's because they're expanding their products. And you also see task mining products as well. And UiPath has also been a leader 5 consecutive years when you look at the Gartner Magic Quadrant for robotic process automation, RPA. Again, that's what UiPath is most known for, but they're expanding outside of that. They're really creating a platform, and AI is really helping fuel that platform. So just so you can see this a little bit closer, you have UiPath here at the very top. Microsoft, it feels like Microsoft is always a leader in so many different areas, and that's why I love owning that stock. You know, if you're talking about endpoint security, you've got CrowdStrike, you got Microsoft. You're talking about RPA here, you've got UiPath, you got Microsoft. But I like those best in breed software companies that are focused on enterprise, and UiPath is exactly that. So when you think of CrowdStrike, endpoint security, laser focused. When you think of RPA and automation tools, UiPath, it's a leader, laser focused in that area. Whereas, of course, Microsoft is a huge conglomerate, has their hands in a lot of pots. They're very good at many things. They're leaders, but they're not always the top. You see UiPath is slightly higher here. This is a great slide just showing you a quick snapshot of the highlights. $287 million in revenue, 19% revenue growth year over year, that 121% dollar-based net retention. But if you take out FX or currency conversion, 125%. This is big, and it goes back to focusing on those larger enterprise customers. Look on the right side, becoming C-suite priority. This is customers with $1 million or higher in ARR. That grew from 190 customers in Q2 of 2023, a year later from 190 to 254. And you can see in the blue, these are still large customers. You're talking about customers with $100,000 of ARR or higher, and that grew from 1660 to 1930. So go-to-market enhancements. They're targeting accounts with the highest basically money to spend. They also reduced the account rep to customer ratios. And that was, of course, to save money. You can look at that as a pro or a con. Assuming they kept their best people, it might not be a bad thing, right? Solution accelerators, blueprint for automation discovery, design, and development. 60 plus accelerators available on the UiPath marketplace. North Star, this is big for the C-level suite. Increase deal size over time and drive faster time to value. And it's really about driving that ROI. Partner ecosystem, this is big. So you've got partners like SAP, Snowflake, T-Mobile, and more. So when they were talking about this slide in the earnings call, they're talking about building better automations faster. They also talked about AI Copilot and Wingman, showing strong demand from customers. These tools are designed to enhance AI creation for both users and developers via a user-friendly experience. So at the very bottom, you've got systems of record. So your ERP, your CRM, your HCM, all the software tools that you use to run your business. And you can see at the top, Discover. So that's process mining, task mining, communications mining, figuring out what needs to be automated. Then in the orange, actually automating. So low-code development, intelligent document processing, and more. And then Operate in the yellow includes things like analytics, unified management, and governance. And this is big because you talk about generative AI, UiPath's AI tools are bolted into products. So their platform becomes more valuable. And this is a quote on the earnings call, more valuable to customers. More customers are realizing that automation is critical for generative AI in areas such as customer service. And on the earnings call, I talked about implementation partners, so the SIs, Deloitte and Accenture. More significant conversations and joint opportunities are happening, not just for RPA, but the entire UiPath platform. So that includes things like mining here in the blue, as well as generative AI. Again, UiPath is no longer just an RPA company. And earlier we looked at this and I talked about the growth in those $1 million plus ARR customers. Now that's 34% in that $1 million cohort. These larger customers are a focus and show the value of the overall platform when all modules and features are implemented. It also helps with that net-based retention we talked about. So going back to this, on the earnings call, they talked about generative AI. A question from an analyst like, do you become obsolete because generative AI can't do what you guys do? Generative AI doesn't change the competitive environment. It actually makes us stronger. Generative AI is usually used to create artifacts. Path offers governance and generative AI that helps Path with adoption. It's an advantage. Path uses OpenAI, Google, Lambda, and everything in the market. CEO thinks that generative AI will become commoditized, but the generative AI buzz has helped UiPath with adoption, understanding the platform and the value of the platform, and has increased discussions across the board. And UiPath has come a long way in the last last couple of years, they've really deepened their product set. This is a leading AI platform for enterprise, and it takes generative AI to a whole different level. Now, some of you might be watching this and be like, I don't really understand what Eric's talking about. Let me give you a simple demo or an example of how this can be used. It's very powerful. Check it out. So one example here where you can use UiPath in a business environment. UiPath is being used to automate mortgage approvals. And you can see how it works on your screen. Essentially what it does is it takes that human element, a lot of that human element out of it, and it really decreases that workload. Now, in a former life, a long time ago, I used to work in the mortgage industry, and there's a lot of paperwork. There's a lot of different things that need to be approved. And if you can automate a lot of those things, it certainly will help a ton. Not only does it help a ton in terms of saving time, it'll also help with things like preventing fraud and making sure the information is correct. Because quite frankly, if you're processing it, a human's processing everything, a human can make mistakes very easily. So it really puts governance and protocol as a priority. It takes that load off of your employees so they can focus on other things, or you probably actually need less employees, which as a business, that's probably a positive. And it makes that process simpler for the end user or the customer. So infusing generative AI to build automations faster and unlock new use cases. Supercharged productivity. We talked about this earlier. Copilot, bringing a user-friendly interface to build automations. In the middle, you've got product and model augmentation. So taking generative AI plus specialized AI, combining those to improve accuracy and really time to market. And then generative AI powered automation. So incorporating generative AI directly into business automation use cases. For example, the mortgage demo that we just looked at. Looking at ARR in millions, you've got a 38% compound annual growth rate. Some other highlights here. Non-GAAP gross margin, 86%. There was $102 million in stock-based compensation this last quarter. $47 million of free cash flow. They also have $1.8 billion of cash with no debt. So it's not profitable, but it does have a strong balance sheet. They're also doing that $500 million stock repurchase program we talked about earlier. So for the guidance, this is around 25% overall growth. So you're actually going to see a spike up from 18% this quarter to closer to 20 to 25% in this next quarter, assuming they meet the guidance. Non-GAAP operating margin, nearly 15%. This is improving. And the big one here, 20% adjusted free cash flow margin. This is a big improvement. We talked earlier about connectors, and they're continuously adding more of these. So UiPath announces new connectors for Google AI and Google Workspace at Google Cloud Next 2023 conference. This was just announced about a week ago. So next we're going to look at valuation. We'll also look at a chart. I'll provide some more commentary. If you're new here, do me a favor, subscribe to the channel and click that bell for notifications. We just broke 50,000 subscribers. Thanks for the support. Let's get it to 100,000. If this video is helpful, please drop me a like and drop me a comment. And I want to invite you to our private community, Patreon Discord. We're absolutely crushing in there. We're having a lot of fun. We're learning a lot together as investors. Check us out. We have a trial going on right now. You can go to patreon.com/firedupwealth. Give us a try. You've got nothing to lose. 52-week range, the low, $10.40. The high, about 20 bucks. And right now it's trading just under $18 a share. Short interest is 10.49%, so keep that in mind. And you could see the stock go a little bit higher if more shorts have to cover. So here's the price to sales ratio going all the way back to the IPO. And you can see it's trading at the lowest ratio that we've seen, just under a 9. It's certainly not cheap, but it's a lot better than up here when it was 40 or 50 price to sales. And this is the forward P ratio. It's showing about a 52.74 on Y charts. So next, let's look at a chart. Now we use charts, we use technical analysis to get better entry and exit points as long-term investors in Fired Up Wealth. When you see orange, that's a previous chart day. Yellow is going to be today's information. Now the yellow you see on your screen is actually from yesterday's chart day. We do chart day live every single Wednesday, Patreon Discord at 9 o'clock a.m. Eastern. You can join us. Again, go to patreon.com/firedupwealth. So we said in chart day, it depends on the earnings. We generally don't like to look at technical analysis when the earnings report is the same day. And we said basically $18 to $19.68 is possible if earnings miss, and you could see it come down to something like $13. So obviously earnings were good, and we saw it come right to $18, and we got some resistance at 18 bucks. It's going to need to fight past this R2 around $18.26. You could see it get closer to, $20 around $19.65, something like that. So is the stock a buy or not at $18 a share? Now in Discord, we were trying to buy this, $12 and less in that range. You can see it got down in November. It was closer to $10.40 a share. So like a lot of these stocks, went from $10 up to 20, it basically doubled. And then it pulled back. And this was an opportunity here around $14 a share. But in this type of environment, people are afraid to buy these type of stocks because they know they can go lower and lower. And so you're going to see these wild swings up and down. And it's really hard to time these because they're short-lived. I mean, these are just sharp spikes up and down. It's not a slow, gradual grind up or down. Just these huge spikes of volatility. I like this company. I like this stock. I own it in both my portfolios. Now, at $18 a share and around 9 price to sales, I don't think it's like a pound the table buy or anything like that. I think the stock certainly could go higher. You know, a lot of the price targets from the analysts I've seen, you know, I'll just show you really quick. And don't buy off of these analyst price targets. It's just to look at to get an idea. The low is $16. That's around 10-11% lower than we're at now. The high is only $22. Now, we could see some more upgrades here in the next several days, but the stock just, you know, popped over 10% today, so you have to be careful with that chasing. And the analysts are mixed, and I think this will change over the next couple days, but you got 7 buy, 1 outperform, 11 hold, but 0 underperform and 0 sell. So if you own the stock, I think it's a hold, and you should be happy with this recent quarter. If you don't own the stock, I think you probably want to wait maybe for a little bit of pullback. But with that said, I mean, the stock could certainly keep running harder. Oftentimes it'll run harder and eventually it pulls back, and that's where you'd wait for the opportunity and pounce on it later. And you might have to wait several months and maybe you pay up a little bit from where it's at now. But what goes up really quickly generally does like to come down. I think this was a solid earnings report. I just don't know if I'd necessarily go out and buy it hand over fist at $18 or more. In the end, always do what's best for you. If you're new here, please do subscribe to the channel and click that bell for notifications. Drop me a like, drop me a comment. Have a great rest of your day. Take care.